Welcome back to the Retire with Confidence podcast. We talk a lot about Roth IRA conversions in our podcast and with our clients. One thing to keep in mind when we are doing Roth IRA conversions is just how much tax is going to be owed, but also the fact that if you're looking at an IRA account, it's not likely all your money. In some cases, yes, just depending on tax brackets and how much you're collecting from Social Security and what level of income you need, it's possible that you have an IRA account where you're going to be able to take the money out and not pay taxes on it just because of deductions and such. But for most people, if they're looking at an IRA balance, and for simple numbers, let's say it's $1 million in an IRA account. A lot of people will look at that and mentally think, I have $1 million. The reality, though, is that some portion of that is likely to be taken out with taxes. So if you have $1 million and maybe between federal and state taxes, you might actually have 700 or 800,000 that is actually yours that you're going to be able to use. That's not necessarily a bad thing, but it's an important realization to have where you say, yes, I have this $1 million in an IRA. I'm not going to be able to use all 1 million because a chunk is going to go to the government or governments if you have a state income tax. The reason I mention that is because oftentimes when we're first working with clients, we may have already gone through the plan for doing Roth IRA conversions, why we're doing them. Everybody's in agreement that we should do them, and it's a pretty obvious reason why when we actually look at the plan, because there's so much just long-term tax benefits. That's what we're focused on, not just what we're paying now, but what we're going to pay over the entire time. So we can have all those discussions, be in agreement, everything's fine. When it comes time to actually do that first conversion, it's a tough pill to swallow for most everybody that we work with and talk to. Once we've been doing it for few years, not such a big issue. People are kind of expecting it and used to it and understand the process. But let's say we're trying to convert $100,000 for the first time. Well, somebody might owe, just throwing out rough round numbers, somebody might owe $30,000 in federal and state taxes. And the initial reaction, if it's the first time you're doing it, is, that's a lot of taxes to be paying. Is this the right thing to do, even though we've already planned for it? It's a very normal reaction to go, wow, that's a lot of taxes. Is it worth it, or should I just keep deferring this traditional IRA as long as I can and pay the taxes later? But it's important to understand that you have this traditional IRA balance. It's not all yours. You are going to have to likely pay taxes on it at some point. So by doing these Roth IRA conversions, we are getting rid of the risk of higher taxes, and we are looking at it from an overall planning perspective of several decades, saying, knowing what we know now about tax rates and about the growth of what that money will turn into when it gets into a Roth IRA and is all tax-free, we can look at it and go, yes, we're going to try to convert $100,000. It's going to cost $30,000 or so in taxes, some more, some less. That just varies. Could be 20. I'm just throwing out an example for numbers. It's going to cost a big chunk of taxes, but yes, it is worth it because now we don't have that tax burden on our money, and it's in a Roth IRA, and we can look at the Roth IRA account and say, yes, that is all my money. That is not going to be taxed. And when we do these conversions, what we end up with are situations where required distributions are less. A lot of cases, the Medicare IRMA tax is less. That's not a big deal per se, but it can be very helpful. It can save thousands of dollars a year if we can keep under certain tax brackets. And it also gives us a ton more flexibility in the future for pulling money out as needed. If it's in a Roth IRA, then we don't have to go, oh man, I need $10,000 for a down payment on a car because my car broke down. Or I'd like to go on a vacation, but I don't want to take money out of an IRA because I'm going to be paying tax on that at higher rates than I want to, so I'm just not going to take the vacation. Those aren't great answers, but if it's in a Roth IRA and if everything fits into your overall plan, well, hey, it's tax-free money. You can take it out, use it, enjoy life, and go on with a lot less stress. So Roth IRA conversions aren't the appropriate answer in every single case, but it's just important to understand that when you're looking at traditional versus Roth IRA and whether or not to do a conversion, when you're looking at that traditional IRA balance, that's not all your money. You're going to have to pay taxes on that when you take the money out. So let's look at when is the best time to do so. We have advantages when we can do planning versus the IRS and Congress, because IRS and Congress looks at things 1 year at a time. We can look at things over decades. We don't know what the future tax rates are going to be per se, but we can still do this planning over decades with the tax rates that are in existence now and with the changes that we know will happen in 2026 if the Tax Cuts and Jobs Act expires and Congress does nothing. So we can use enough information to do this long-term planning, not trying to have a crystal ball of what 15 years from now is going to be, but understanding that right now we are in historically low tax rates and we want to take advantage of that, even if it is really painful to send the government taxes before we absolutely need to. In a lot of cases, it's going to save us a ton of money in the long term. So when you look at that traditional IRA, realize that's not all your money. So let's look at how do we reduce that tax burden over the long term to make more of it